On September 16, 1992, one man made $1 billion in a single day. His name was George Soros, and the institution he challenged was the Bank of England. But to understand how he did it, we need to go back 3 years. In 1989, the Berlin Wall fell. Germany reunified. West Germany suddenly faced the enormous cost of rebuilding the East. The German economy began overheating. Inflation started climbing. To control inflation, the Bundesbank raised interest rates. That decision would set a trap for the British pound. Britain was part of the European Exchange Rate Mechanism, or ERM. Think of the ERM as a currency cage. The pound had to remain above 2.778 Deutsche-Marks. But Britain was already in recession. Businesses needed lower interest rates, not higher ones. Meanwhile, investors were moving their money to Germany. Britain faced an impossible choice: raise rates and damage the economy, or abandon the peg. It was a contradiction that couldn't last forever. One person saw the problem early: George Soros. He believed the peg would eventually break. For Soros, it wasn't a question of if, it was a question of when. So he began building a massive position against the pound. First, he borrowed pounds he didn't own. Then he sold them, planning to buy them back later at a lower price. Eventually, Soros committed nearly $10 billion to the trade. Then came September 16th, 1992. Black Wednesday. Britain woke up to a full-scale currency crisis. Sell orders flooded the market. Soon, traders around the world smelled blood. At 7 o'clock in the morning, Prime Minister John Major made his position clear. There would be no devaluation, no retreat. The Bank of England immediately began defending the pound. $3 billion disappeared in just 1 hour. Then came an emergency rate hike, from 10% to 12%. When that failed, rates were raised again, this time to 15%. But the markets didn't care. By the afternoon, $15 billion in reserves were gone, and still, the pound kept falling. That evening, Norman Lamont faced the cameras. Britain was leaving the ERM. The pound immediately collapsed, exactly as Soros had predicted. By closing the trade, Soros earned roughly $1 billion, but ordinary British people paid the price. The government's credibility was shattered. The day became known as Black Wednesday. But there's something people often misunderstand. Soros didn't create the problem. Britain was defending the indefensible. The peg itself had already become a fiction. Years later, Soros explained that he didn't cause the crisis. He simply recognized it before others did. And something surprising happened afterward. After leaving the ERM, Britain's economy started growing again. In some ways, Black Wednesday became a blessing in disguise. But the real lesson goes far beyond Britain. Markets are ultimately judgments about reality, and eventually, arithmetic beats politics. On Black Wednesday, $1 billion proved that point, and it's a lesson the Bank of England never forgot.